Today we're diving into an essential topic for aspiring franchise owners. Credit requirements if you're considering buying a franchise and need financing. Understanding your credit score is crucial. In this video, we'll break down the credit requirements for SBA loans, ROBS plans, and alternative funding options. So let's get started. First, let's talk about SBA loans, a popular choice for franchise financing. Typically, a credit score of 660 or higher is required to be eligible for an SBA loan. But that's not all. The SBA also looks at your SBSS score, which should ideally be 165 or better. Your SBSS score factors in various financial aspects, and it's critical for loan approval, especially with the loans sub $500,000. Most of these banks doing the express loans, they'll pull an SBSS score or a similar credit model, and if you score, they move you right into processing. And those scores range from, I believe, 100 to around 300. Typically, they're looking for a 165 or better. It takes into account your personal credit score, your business entity, and the franchise or the business itself. Now, what if you have an old 401k and are wondering if you could tap into your franchise investment using this old 401k, which we'll call a ROBS rollover plan. So if it's eligible, you could potentially roll that over into a ROBS rollover plan and either buy or the franchise outright, or potentially that could be your equity injection, your down payment for the SBA financing. We have specialists that we deal with that are very familiar. They work strictly in setting up these rollover plans. And they also can tell you if your retirement vehicle is eligible. So that is another option. Some people have enough in an old retirement account where they can pay cash for all the working capital and everything needed. Some people don't, and they'll use that as a portion of their down payment or equity injection, as we call it in the SBA world.
Meet Bo Eckstein, the driving force behind Business Ownership Coach, unlocking the path to business ownership. Visit www.businessownershipcoach.com. Thrive with Business Ownership Coach.
Now we're going to talk about some alternative funding options. If your SBA loans and your ROBS plans aren't the right fit for you, there are alternative funding options to explore. One option is using equity from a home you own. This could be a viable source of financing, but it's important to understand the risk and consult with a mortgage expert if you're going to utilize a HELOC. So if you have a lot of equity in a primary residence or a rental property, some people use that. They tap into the equity. They might have enough money in that equity in that property to use that to outright purchase the franchise with all the working capital and money needed to get the business going. So you can use that. You can also potentially use that as your equity injection for the down payment with the SBA. Typically, when you're using borrowed money on an SBA loan, they're going to want to see that there's outside income to support that. So if you have an existing W-2 job, that's outside income, or if you have some kind of rental income that can support that, then it can be eligible for using as your equity injection or down payment for the SBA loan. Another alternative is an unsecured term loan. However, this typically requires a higher credit score. To be considered for unsecured term loans, you generally need a credit score of 720 or better. Keep in mind that interest rates and terms can vary widely. So what do you do for this, and why would you want an unsecured term loan? So typically, maybe you can't go the SBA route for whatever reason, or it's a timing thing and you want to go the unsecured term route. So when would this be applicable? We utilize this oftentimes in the franchise world when somebody's got really good W-2 income, they've got good DTI, and we have a company we work with. They go out and source unsecured term loans through banks and credit unions. So you need good credit and low debt to income ratio. If you follow there, this could be a very viable option where maybe there's a reason you don't want to go SBA to go maybe a full doc or loan. You do need to provide some of your income documentation to get these unsecured term loans. They could be in your personal name, or potentially sometimes they could be a business loan. But typically the majority of them are in your name, and it's based on your current W-2 income and credit. So oftentimes this is an alternative that we're using to buy a franchise and not use the SBA loans. In conclusion, the credit requirements for buying a franchise can vary depending on the financing you choose. SBA loans typically need a 660 or better. You need an SBSS score that pulls a 165 or higher. You might go alternative and use your ROBS plan if you have a 401k that could be rolled over into the ROBS plan, right? You can do unsecured term funding, and that's basically based on your current job and your low DTI together. We work with a company that does a lot in the franchise space, and they go out and they'll get you 1 or 2 or maybe 3 or 4 different term loans. Then you can use that funding to buy the franchise. Maybe you don't qualify for SBA financing for whatever reason. That's an alternative. You can get a line of credit on your home if you're a homeowner with equity. We can use a combination of all this together to get you financing, get you funded to buy your franchise. So it really just depends on several factors. So we go over this when we meet with you, and you can go to bookwithbo.com, and we can do an introductory call and figure out what you're trying to do and what you're trying to accomplish, and then we see what you're working with. Alternatively, on SBA financing, you can also bring in an investor partner that owns less than 20% of the entity, and they could own a small portion of the business, and you could utilize SBA with an investor partner. SBA also allows for gifts. As long as it doesn't need to be repaid as a true gift, you could potentially get a gift for your equity injection for the franchise acquisition. So there's a lot of ways to go. I'm happy to discuss any and all of these options, and I don't do all of those options. I don't do HELOCs on your house, but what I will do is strategize with you and help you come up with a game plan so you can acquire the franchise of your dreams. So anyways, hope you liked this episode. It was all about how to finance a franchise. We have tons of videos on how to buy a franchise. We have deep dives. You can also go to franchisefastpitch.com, and you can come to our events. And if there's not an upcoming event, it will take you to an old event we've done where you can learn about different franchisors, different business models. We're here to serve you. Our goal is to help 10,000 people over the next 10 years become entrepreneurs. Whether you're aspiring entrepreneur, you're an existing entrepreneur, you're a real estate investor and you're looking to diversify and own some businesses, we can help you and love to meet with you. So go to bookwithbo.com. See you soon. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.